Here's a question for you. It's my first time investing in the stock market. Lately, the downward side in pricing is giving me the scare. Are there any rules that I should strictly follow in the stock investing to ensure me a better profits on my portfolio? Is that something that might sound familiar to you? If so, stick around. All of that coming back. Stay tuned. So basically, the question here is for first-time investors is, how do you protect your portfolio? How is it that you can manage your portfolio in a way that you won't catch, let's say, a heart attack? Okay, so I'm going to try to help you guys out here and give you 6 rules. Now, these are not the 6 rules of the commandments, and there could be many outlets of information out there in the internet that you can try to give yourself some kind of guidance as far as to how to invest and how to protect your portfolio. Now, these are not, like I said, the 6 commandments, but these are things that normally I do on my side to protect my portfolio. Hopefully they might work for you. Take what you need, apply what it's good for you, and what's not good for you, just don't apply it.
Number 1. Don't make money your God.
Do not make graven image of money. Money has always been and will always be just one of these tools to achieve the more important things in your life. The same goes for stock investing. Don't get me wrong though, money and stock investings are important tools to use. Just don't let your life revolve around them as if they're the only reason for being. And when you make money, don't forget to whom the glory goes to. Goes to yourself.
Number 2. Forget about buying at the bottom and selling at the peak.
Your chance of buying at the low price and selling at the highest level are as slim as you winning the lotto. That's about a 1 in 29 million chance of you getting it right. Why? Because you will only know that the particular price is either the lowest or is the highest after the fact. Worse, you may not even place your order in time for that to happen.
Number 3. You better watch out. You better not cry.
Generally speaking, stock price tends to move together. It's just that some move faster than others. A way to measure this relative movement is to measure a stock beta. Usually a stock beta is measured against a board of market indicators like the NASDAQ, the S&P 500, the Dow Jones, you get my drift. So it's just basically a stock exchange composite index. So let's say that the stock beta is 1.5 and the NASDAQ exchange is at 2% return. That stock will make a 3%. Basically, the math is 1.5 times the return. While the stock would normally produce a higher return than, let's say, the S&P 500, it could also produce a larger loss. If the NASDAQ exchange were to move down by 2%, that stock would then lose a loss of 3%. A higher beta would mean a stock with a more volatile and therefore riskier behavior, vice versa, depending on your exchange that you are trading in. This is not to say that the stock with the higher beta should be totally avoided. You just need to match your risk tolerance with that of the stock that you are buying. In other words, buy with your eyes wide open. You don't need to perform the computations for the derivative of the beta, as you can simply just look it up on a lot of your platforms that you're trading in. That could be from Robinhood, TD Ameritrade, Scottrade, or any other platform. They will give you that information.
Number 4. Don't cry over spilled milk.
If you are truly diligent in studying your options before investing, you will always make the best decisions given the information available to you at the time. However, only thing that is constant in your life is change within yourself. Your investment decision will have a shelf life as many factors can change with the underlying companies you bought. So make it a habit to review your investment periodically. It's recommended that you look at your investments once in a quarter, but for me personally, once a week, or if you're that busy, maybe once every 2 weeks, and if you're really that extremely busy, maybe once a month. But don't go too far off without checking your investments. Things are always changing.
Number 5. Do not covet your neighbor's allocation.
Even if someone comes up to you to brag about a ton of money that they made on the market for him or her, you know what I'm saying? That is his or her allocation and is not yours. His or her allocation was based on his or hers objective and risk preference. And perhaps him simply or her simply got lucky. And yes, there is such a thing as luck with the investment. You would need to come up with your own allocations according to your own return objective and risk preference. How else would you be able to tell your own story?
Number 6. Don't get excited with breaking news.
Stock investing is very depressing at times. Keep your cool when you come across exciting news. In the first place, if it was exciting news about a certain stock, it will already be time to sell that stock and not to buy into it. You are supposed to buy before breaking news. In fact, if you are investing in a stock with significant amount of funds, expertise, and timing, you will get wind of development before it hits the media and becomes news. More importantly, it is the long-term earning and growth prospect of the underlying companies that you should be focusing on. So hopefully these are the things that can help you move forward and help you be more proficient, more intelligent, more dynamic in how you actually pick stocks, how you use your stocks, and how you actually move your money around in your portfolio. Hopefully this will help you out, guys. And for us, I need to apologize to my fans out there because I haven't been able to put out a lot of videos, and that's due to a lot of stuff that we've been doing on the background here. I've been super busy and haven't really had a chance to actually come out and do these videos. We've been running a blog and we've been also doing a podcast on the side. So it's been really busy, guys, and I do apologize for not putting out more videos. I am going to try to be a little bit more proficient with this and try to help you guys a little bit more due to the fact that I'm getting beat up on my blog as far as to why I'm not putting up videos and why can I not put more videos up, and is it something with YouTube? Is YouTube blocking me? And it's not YouTube blocking me. It just happens to be that I just don't have the time to do it. And it's been a very busy time for me. So hopefully I'll be able to put out a little bit more video outs for you, teach you guys a little bit more of what's going on, and hopefully we can, give you more content as far as to things that matter to you the most. Hopefully, like I said, hopefully we can put out more videos and help you guys out in the future. And if so, you can come and follow us. As far as to the podcast, that's not over here in the United States. Don't think it's available. So therefore, my podcast, I believe, is blocked in the United States. I don't know why. I really don't know why. And I just don't have the brain power right now to figure this out, guys. And my blog is open for a lot of people, but basically, if you guys follow my blog, you definitely know that my blog is more dedicated to a one-on-one type of situation where I take time to deal with each and every person on a personal level and help them to succeed in their quest to become more, how can I put it, free of life itself and do more things that they would like to do. So you can follow us on the blog, And hopefully, you know what I'm saying, like I said, I will try to do my very best to try to give you the best information that I have to guide you in the best situation that it's going to. But as always, it's always best to always follow up with a professional, because having a professional on your side, it will help you out in the long run as well. So I know some people look at it and be like, I don't want to spend the money for a professional, but sometimes it does help to have a professional on the side, or at least get yourself a CPA who can actually look at your finances and see where your money is going, how you're spending your money, and point you in the right direction, how to save a little bit more money, and how to actually put that money to better use down the road. All right, because we're all getting older, and it's just, that's the way it is. All right, guys. So again, I do apologize to my fans for not putting out more. I'm getting beat up on the blog because I'm not putting up a lot of videos. So I'm going to try to do my best to actually put more videos up for you guys. And with that, guys, you know the slogan: more gains, more gains, more gains. Giving it your peace out.